When you're weighing up the factors in the context of China tech, what were the things that you were looking at, short, medium, and long term?
Thanks for having me. I think we have been skeptical on China, as many people are, but I think it's really how undervalued China has been versus, say, the US or other developed markets. And also the fact is positioning has been very light. I mean, for us, we have been underweight for quite a sustained period of time. So I think that is shifting, and I think Chinese market is very momentum driven and very liquidity driven. So we have seen both happening, and I think we would like to participate in this rally. This probably has more to go. And in terms of Chinese tech, I mean, obviously undervalued, very unloved versus the U.S. counterparts. Obviously, they're different, but still, we think that there is still much upside potential from here. But having said that, we just upgraded modestly. I think there's still a lot of question mark for the longer term.
Emily's reporting just in that conversation was largely about some of the domestic chip names in China. What's your attitude towards the semiconductor sector in mainland China?
Yes, I think it is obviously a very state-supported sector, has been for a while, long-term wise. So I think it makes sense for investors to favor this sector, given basically, I think the new tech, the semiconductor strategic areas of, those equities have, it should do well, given how important that is. But ultimately, we have to understand that a lot of developed economies are likely to still being skeptical and have restrictions of all sorts on those companies' products. So I would say I would participate in the rally. I do think that it has further to go, but I would be a bit more cautious over longer term. And we have to kind of understand where to take profits when it is necessary.
To that point, Janet, do you think that people are protecting to the downside enough? Do we think a lot of people are going to get burned once again?
I mean, it is potentially possible. We have seen that play out before in the previous bull market cycle, and then a very sharp bear market in China. We have seen that play out again and again. But I think it could last for quite a bit, as I said, given how light the positioning, how underweight it is for global investors. So I would say it could have further to run in the next a couple of months at least, I think. Right. I think the Chinese authorities, their hands are tied. They would just have to provide more stimulus. But you're right, there is absolutely a chance for some investors to get burned. And so that's why we have to monitor it very closely.
What's been interesting is there's been institutional money flowing in, David Tepper saying how much he's liking China, and also retail. I want to get your check just more broadly on sentiment towards semiconductors globally, technology globally. Where are we seeing the optimism? Still in institutional money, or is it now sort of retail and we question, therefore, the longevity?
I think both. I think for us, for example, we still like the global semiconductor sector. Obviously, that's mostly US play. So I think there's a lot of structural supportive drivers behind that. We are very happy to get exposure to those high quality companies. So I think for institutions, I think it will be very dangerous if you don't participate in the semiconductor, that AI related theme. I think for retail investors is I think once the momentum is back, I think that would draw in more participation, particularly as interest rates are being cut, the economy continues to expand, and hopefully less bad news out there on the headlines. I think that could help. Overall, we still like the sector pretty much. We have stayed invested, and we continue to encourage investors to add in more money when valuations have turned attractive, say, the past couple of months.
Janet, when you got to your desk this morning in London, how big a factor or risk was trade risk or supply chain risk for technology investors around the world?
Obviously, it is part of the consideration, given that the chip industry is very, the supply chain is very complicated, and if there's widespread trade protectionism, then obviously that's not great. But fundamentally, the demand is still very strong. And I think what we are a bit more reassured now is that if you look at the polls and the probability of Trump winning the election by betting market, it has gone down. Obviously, it's a very tight race, but it gives us a bit of comfort to be a bit more positive on the China equities story and also the global semiconductor play. But I think ultimately, fundamentally, is about the demand, the long-term buildup of AI infrastructure, and how strategically important that sector is for many sovereigns out there.
Janet, how important, therefore, when you sat down, was the 4% number on the 10-year yield in that macro context for these AI bets?
Well, the thing is, we saw yields go back to 4%. I think some small to mid-cap stocks could be struggling a little bit today, but we still see some of the key semiconductor stocks rising. Obviously, it's very company specific, but what we think is, I think, strong economy, good job market ultimately is good for the world economy, for the US, for corporate earnings, etc. I wouldn't look too much into this one-day move for equities. If they're down or struggling a little bit, I would still be quite comfortable to be overweight in the US and in the US semiconductor space.